What's going on, good people? Welcome back to another episode of the Trading Challenge. Today is day number 16, May the 1st, 2023. We made some trades today, so let's get into it. So, my goal for the session was to just trade my setups that I know and to trade them the right and effective way and trade them properly. So, let's talk about trade number one. Let's get straight into it. So, on trades number one and two, well, before I even start, I want to say that I went from trading one contract the last 3 weeks to now trading two contracts. I always said that if I have a 2 week span where I do very well, I will step my contract size up. So now that I'm trading two contracts, it's a little bit of a different mental game. I thought it would be the same, like, just come in and make regular trades, but I was thinking way too much, and trades one and two are a great example of what went wrong. So in a normal scenario, I go long at the bottom of the zone and I hold it up until the top. But on trades one and two, I was just too afraid to hold my trades because I was holding true contracts. But when it comes down to it, a trade is a trade. I shouldn't worry about the dollar amount that's behind the contract. I should worry about the amount of points that I'm trying to get on each trade, and I should make sure that I focus on having a good entry and a good exit. So that's what I learned from trades one and two. So then we move on to trade three. I went long after seeing a higher low. The trade was in profit, but I didn't move my stop up to break even. So that hurt me a little bit and I had to take a loss on that. And then we come back to trade four. I disrespected my break even trade, which is actually a major violation of one of my rules, because my rule is if I have a break even trade, I don't want to really hop back directly into that trade unless I have clear signs that I should. In this situation, I didn't have clear signs that I should hop back in, and I took a loss on trade four because of that. So then on trade five, I just continued making the same bad decision. So this was more so just poor trade identification by me in the first place. Because if you look at the notes, it says that I went long against a bear channel trend line after multiple lower highs were established. So that right there explains everything in itself. You don't really want to go long against any bear trend line, especially not after you see the higher lows that started at point A. So look at that. This is the top, this is the higher low, and that's where I went long at. So that was just the wrong decision right there. But on trade six, I flipped my bias back around to the short side once I saw prices spike back through this zone. So actually, let's go back to trade five and talk about another mistake I made, which was that I had forgot that news came out at 10:30. I checked my calendar literally last night, but I still forgot that the news came out at 10:30. I mean, not 10:30, but 10 o'clock. It was the flash manufacturing PMI, if I'm not mistaken. Now, I really didn't think it would make that big of a difference, so I said, yeah, whatever. But when I was holding that trade at 10, I held that trade. I think I entered at 9:58, and then at 10 o'clock, that's when we had this big shoot to the downside where you see I got stopped out. So that was just my fault right there. That's just bad trade management on my part. I should have done better, and that's something I need to work on. But when that spike happened, they came all the way back down to the bottom of the zone. Let's zoom in a little bit so we can see exactly what I'm talking about. Okay, so they shot back down to the bottom of the zone, but they closed right back at the same point that they opened and pretty much just made a big long candle doji. Now, the next candle after that, they pushed back to the top of the zone, pulled back. On these next two candles, they came back into the zone. So when we came halfway into the zone and then we pulled back to close at the top of the zone, that's where I went short at trade six, because I've seen this trade multiple times throughout the course of last week, and I know exactly how to trade that one, which is what I should be doing, waiting for what I know how to trade and then trading it as soon as I see it. So six is a great example of the things that I want to do and strive to do if I do everything right when it comes to my trading plan. So shorted the zone as it came back into it, took prices all the way back down to the bottom, and that's where I took profit. So after that, we see a higher low get formed on the bottom of the zone. We push back up to create this false breakout from the top of the zone. Now, I thought that at one point in time, this would act as a higher low. Notice how, let's zoom in a little bit. Notice how I drew this ellipse right here where trade number 7 is. I only draw ellipses when I see a higher low get formed. So in my opinion, I was looking at this green candle as the higher low, which from a technical perspective, yes, that is true. But read the notes real quick. I went long expecting the higher low to hold. I should have looked left to the high point of point A from earlier. So even though this was a higher low that got established, look at where we made it at. We created that higher low at what was the highest price of the day over here at point A. So we pushed past that price by just a little marginal amount. So that's not really a real breakout. And then I still went long on that breakout. So that's on me right there. That just really comes back down to trade identification. I don't want to keep using the fact that I was trading two contracts as an excuse, but I was definitely thinking a little bit differently than I should have been thinking in this particular session. So the goal going forward is to just focus on each trade for what it is. Take the best entry and the best exit and focus on the results of the trade when the day is over. So that brings us to trades 8 and 9. So I think on trade 7, so you remember on a lot of the streams from last week, I talked about something that was called a snowball effect, where if I make one bad trade, I have a tendency, just for me personally, to continue making more mistakes because I'm trying to recover from trade 7 instead of just trading what's in front of me. So I think taking that loss on trade 7 kind of made me hesitate when prices came back into the zone on this large red candle right here. So notice how we made our high, and then from that point forward we just sold straight off back down into the zone all the way to the, well, no, excuse me, that's the support level. So we came all the way back down to the zone and pushed right down through it. Now on that first touch and that first push through the zone, I should have been short. I considered the short trade, but I hesitated and I didn't take it because I had pretty much the same idea that I had from trade number 6. If we're coming back into the zone, I'm assuming that we're coming back to test the bottom. So my problem was on trade 8, I did go short as prices were in the zone, but I went short after this candle right here was formed. So if anything, even though prices didn't come back to the bottom of the zone, this is probably as good enough as we can get, because this wick over here is pretty much within the same general area as the wick that got established on this higher low from previously. So for me to take the trade on the second attempt for prices to hit the bottom of the zone is just a bad entry on my part. If you hesitate and miss the first one, you don't really want to take the second one. You just got to let it go and say, look, I missed the first one. I'll wait for the next best opportunity that I can get. So then on trade 9, I tried to double back and do the same thing that I did from trade 8. So it was bad enough to make the mistake I did on trade 8, but to double down on that, that's just, once again, bad trade management on my part, and that's something that I have to clean up and get better at, and I will. So after trades 8 and 9, I gave the market a little time. I just wanted to sit back and really wait for something that I understood and a setup that I knew. So we see prices pretty much create a zone on top of what used to be our previous zone. Now we're consolidating on top of that. We push up, create a higher low, come back, retest that higher low, and if you actually go back down to the bottom of this wick next to this swing low down here, we can draw a trend line if we take the bottom of this wick and connect it to this bottom right here and then extend it up throughout the rest of the market. It will actually come back to touch this candle right here that retested this higher low that was created on top of the support line. So notice how after we hit the top of the channel and the support line, let's zoom in a little bit, we pretty much went straight up from that point. So that's one of my favorite setups also, which is called a continuous bull spike. So in a continuous bull spike, I look for 3 straight candles to the upside. So we have that three strong candles to the upside and a trend that's already been established and it's already clearly obvious. So we were definitely clearly in the uptrend already, and then we had 1, 2, 3 strong candles to the upside. So after the close of the third candle, that solidifies the legitimacy of the bull spike for me. So I also like to look for a long tail candle wick, because to me that represents the pullback. Because a lot of times in this spike, you won't have a multi-candle pullback like you did right here, where you have 1, 2, 3 back down to support. A lot of times the pullback will happen within the candle. So at one point in time, we were up here as a completely green candle, and we closed pretty far away from the highs that we made. That right there is the pullback, and you want to go long after the close of that candle. So that's exactly what I did on trade number 10. I went long at the close of the third candle in a continuous bull spike, and I held my trades all the way up to my scalp target 20 points higher. So that right there is textbook execution by me. I was patient enough to wait for my best setup, and when I saw my setup, I waited for the ideal entry point and I traded it perfectly, entry and exit. So trade 6 and trade 10 are a pretty good representation of what I want to put forth going forward into the future. It's just these trades like 7, 8, 9, 3, 4, 5, 1 and 2. Those are the things I need to clean up. I need to work on those for sure. So let's talk about these last couple of trades from this morning session, and then let's get into what we did this afternoon after these trades were over. So trades 11 through 15, I was looking to play the zone once again. So at 11, it's the same mistake that I made from trade 8, because notice how on trade 11 we came back down into the zone. This was the first touch. We came back and we hit the bottom of the zone. This is where I should have got in when prices first pushed through the zone. Now me getting in where I got in for trade 11 on the second attempt to come back down to the bottom of the zone, it's just a mistake. And the fact that I'm making the same mistake within the same session, probably 30 minutes away from each other, that's just a big problem. You know, I dropped the ball today. I'll be honest, just not my best day at all. But on trade 12, I finally got back to my senses and I was like, look, okay, we pushed back down into the into the zone. We didn't come to the bottom, but we did pull back. Now that right there is a valid entry and what I should look to do every time. That is a great trade. I'm following my trading plan. But then on 13, 14, and 15, I took the short trades, but I just wasn't necessarily too sure. And also another one of my rules is when I'm indecisive about what I want to do, I just need to sit back and wait and give the market time to play out until I see something that I clearly recognize. Kind of like what I did after trades 8 and trades 9. So that's the mistake that I made on trades 13 through 15. I just took small loss after small loss after small loss, and when you add all of those small losses together, I pretty much gave back all of the gains that I made on trade 12. So once again, just bad trade management by me, something I got to get better on. So that's what I did in the morning session, and then I came back at the close and I traded the closing session as well. So let's talk about those trades. So on 16 and 17, you notice the same thing that happened on trades 1 and 2 that we made earlier. We had opportunities to enter within a consolidation zone at the bottom of the zone, and we had opportunities to take the prices all the way back up to our target at the top on trade 16 and 17, but I didn't hold them to my targets because I was just a little bit too skeptical, and I understand why. I took big losses throughout the day up until that point, so I was like, does my strategy work? But 16 and 17 showed me that, look, if you hold your trade and you take the right setup, you have a good chance of being successful. So I come back on trade 18. I shorted it at the top of the zone and took it back down to not exactly to the bottom, but I took it back down to the opening price of this green candle, because I saw prices start to reverse off that level, and I said, okay, that's probably the bottom of the zone for that point. So that trade is good for me. On trade 19, though, this is not the proper way to trade the zone. It's only 2 ways that I want to trade the zone for me, just as a trader in particular. So I either want to short the zone from the top, or I want to go long at the zone from the bottom, and that's it. I don't really want to take any trades within the middle of the zone because anything can happen. In the middle of the zone, if you go long, prices could come back down to the bottom and stop you out. If you go short, prices could come back to the top and stop you out and then go in your direction. So I realized my mistake at trade 19, and I quickly cut that trade and got rid of it and just took a small loss on that one. So I'm glad I was able to recognize my mistake and then quickly act on that mistake too, rather than just freezing up and taking a full stop loss on that. So then we come back to trade 20. I used the same idea that I had on trade 18. I saw prices come back. tagged the top of the zone, and as soon as I seen the prices start to move away, that's when I shorted and I took prices back down to the bottom of the zone once again. So then let's talk about trade 21. Now trade 21 was a potential entry that I should have made profit on, but I managed my entry the wrong way. So this right here is what I call a continuous bear spike. So remember how we just had the continuous bull spike in the morning session? Well, we had a continuous bear spike in the afternoon session. So it's the same concept as the bull spike, just reverse everything. You want to see three straight candles to the downside. So we had 1, 2, 3. At one point in time, all of these candles were pretty strong bodies, and they pulled back. So that represents our one candle pullback that we look for in any type of spike. So I should have been going short on this candle right here, where we have this long body. Well, what was a long body at one point, but it closed extremely far away from the lows that it made. So that right there is the pullback opportunity that I'm looking for. Now I should have been going short on this candle right here, but I froze up and I just hesitated. When it comes to good setups and you see your entry, you can't hesitate, because you got to remember, the reason your entry works is because you have other people in the market that's taking that same trade also. So if you hesitate, everybody else is going to get their orders and the market is going to move without you. So you see your setup, you see your entry, and you take it without hesitation. So that was my problem at 21, because you see, if this was the entry candle, look at how I actually made my real entry on this green long tail candle wick, which was the same problem that I had on, I think, what was that, trade 8 and trade 11, where I had an initial touch where I should have took my trade, but I waited for prices to come back to my entry, and that's just not the way to do it. And also notice on 21 how prices made this long tail candle wick and pulled all the way back up. Now I'm not gonna say the short trade right there was bad based on the actual location, but it was wrong based on how I entered. I had my order already resting up there as prices were coming up into it. Now if you're looking for a short trade, you have an ideal level in mind. You want to see prices come back to that level, but you don't necessarily want to take your short order as prices are coming up into it, because you never know how strong the buyers can be. The buyers might push prices past that level and keep going, but then when you see the buyers eventually fizzle out, and if that buying dries up and prices are able to fall back below that target level that you were looking at, then that's when you go in for the short trade, as prices are falling back through your price, not on the way up as they're coming to your price. So that's where I went wrong on trade 21. Now we come back to trade 22. Let's read the notes for that. I went long after a higher low was formed, but I wasn't sure about the trade, so I cut it early. So one thing I want to talk about that I definitely learned today and over the course of the past week or two is that a lot of times when you have a zone and you have a breakout either above or below the zone, and you see some type of price pattern, like if you see a breakout to the downside, but then you see prices rebound, create a higher low below the zone, more than likely they're coming back into the zone. So that's exactly what happened right here on trade 22. Notice how we broke out of the zone on 21, came back, touched the bottom of the zone, pulled back, created this higher low right here where we have the ellipse, and then we pushed back into the zone based off of that higher low that got formed below it. So let's take a look at a day from earlier last week. Okay, so this was, I think, Thursday from last week. So we had a zone, same scenario as today, right? Notice how we broke out to the downside, but then we created a higher low at this ellipse where trade number 5 happened. So when you have a higher low get established, when prices break out from below the zone and the higher low is right below the zone, more than likely that higher low is going to have enough momentum to push prices back up to the top of the zone also. And notice how on this day, I think Thursday, right? April the 27th. So notice how when we broke out to the top side of that zone, we came back, created a lower high, and then another lower high that pushed us back down to the bottom of the zone. So that was a false breakout to the upside, just like we had a false breakout to the downside. And we can see this happen on multiple occasions. So this is back to today, May 1st. Notice how up here at swing point A, we broke out from the zone, right? But then we created a lower high above the zone, which eventually led us to come back and reclaim those prices that were in the zone once again. So that's just another example of how that little concept works, and that's something I was able to use that I saw on trade 22 and 23. So we made that higher low. As soon as we made that higher low, I went long on 23, expecting prices to come back into the zone, and I was able to take my prices towards the top of that swing. So then on trade 24, I pretty much just had the same idea I did from 23. So prices had came back into the zone, reestablished themselves, stayed on top of the zone, and weren't able to break, not on this candle, this one, or this one. Now I know it's usually a big spike when the market on close orders come in at 3:50 p.m. So I'm saying if I know a big spike is probably coming, it usually moves in line with the direction that the trend is already going. So I'm saying, okay, if it's a sideways trend and we're sitting on top of the zone after we already created a higher low and we haven't been able to break out of the bottom of the zone, let me just put my order here at the bottom of the zone at 348. Well, I think this was 349. I went long at the bottom of the zone, and then when the spike came out and the MOC orders got filled, it came all the way back up to 175. Now I didn't hold it all the way up to the top of the zone because I could see that overall we were kind of trending down. If you look at this as the ultimate swing high top, this right here could be considered lower highs that continuously got tested. So this was the lower high. It got retested right here, and right here. So if you're looking at it from that perspective, you don't really expect a push all the way back up to the top of the zone. You expect it to probably come back to the top of this wick, which also lines up with a major level, a major price level at 175. So that's why I look for the exit at that price on that one. So that right there is just a textbook representation of my trading plan. So I started off the day really rough, but I got my head together and just thought about my trading plan and said, look, I'm going to come into the afternoon session and trade things the right way. So that gave me the confidence that I needed, because at first throughout the day I was like, man, what's going on? I just can't get it right. But what it comes down to is focus. I need to be 100% focused. There's no such thing as being 99% focused, 97, 98, 95. I have to bring my A game to the market every day. I have to make sure that my exits are on point. I have to make sure that my entries are on point, and that my trade management in between those 2 points is also fire, and that is proper, and that I'm doing the right things that I'm supposed to. I have a great trading plan. If I follow that trading plan, I can do very well. So it's just about having the discipline to be able to focus on the things that I do well and be able to reject the things that don't really make me money. So that comes down to me as a trader. I feel like I can and I definitely will be better. So I appreciate you guys for tuning in with me today. We'll come back tomorrow on day number 17, May the 2nd, and we'll run it back. But until then, take it easy.